Welcome to the show. I'm Andy Hagans, and today we're taking a deep dive with one of the most well-connected people in this entire industry. I mean, you wouldn't say that, but I would. Marc LaCour, editor-in-chief of the Oil and Gas Global Network. Welcome to the show, Marc.
Thanks for inviting me, Andy. This is going to be fun.
And it is going to be fun. I want to be honest with our listeners. I've been taking a deep dive into all of your content. Your show, your original one show, is amazing. And I actually think you have a gift, and this is sincere, right? Flattery is okay as long as it's sincere. That's what I've heard. So this is sincere, that I know you have a lot of expertise with oil and gas, but when you guys do your mailbag, people are asking the most basic questions, and you have this way of breaking it down and making it simple. And I'm like, well, shoot, even I can understand that.
I appreciate that. I actually hear that a lot, and it makes me feel good. The ability to educate your audience in a way that's entertaining to them is magical. I mean, I'm a podcast listener too, and that's what I'm always looking for. Is like, can I learn a little bit while I'm working out or commuting somewhere, and can I do it in a way that's enjoyable to listen to? So thank you for that.
Yeah, you're welcome. Yeah, and that's kind of been the challenge on my main show, the Alternative Investment Podcast, and now the challenge here, breaking this stuff down. I think a lot of people think, well, to sound smart, I have to sound very, complex and use lots of technical jargon. But in my experience in the investment landscape, I mean, even financial advisors and asset managers, they want things to be made simple, right? You can't be embarrassed to ask these questions. One thing we were talking about before we hit record that I want to bring up, this oil and gas industry or the energy industry, it's so big, it's not even really possible to understand everything. Is that fair?
It's more the fair. I have a passion for this industry. I've been here for 25 years, and I learn something new every day. There's no way to understand everything. Even if we talked about finance, pure dollars and cents, there's 13 or 14 different layers of profit made before the oil even gets out of the ground. And it's crazy, but it works, right? I will give your listeners a fact to let you a little tidbit to help you understand how big this industry is. At any one time in our world's oceans, there's more weight in oil being moved around than the weight of all the fishes in the ocean.
Wow. Okay.
Yeah. That's how big this industry is.
Yeah, and then there's all sorts of sectors and then subsectors, and then you have the geopolitics. I mean, it'll make your head spin. But actually that brings me to your business, and I think it was really visionary. These big, complex industries, they need media covering them to, facilitate communication, to help people kind of latch on, consume content in a way that's convenient for them, right? Because most people don't want to sit around and read a textbook about geology, right? So, but consuming a podcast or watching a YouTube video is a lot more palatable. So give us some background on the Oil and Gas Global Network. How did that even come about?
So you're going to laugh and hear this story. So been in the oil and gas industry for 25 years. I've always sold technology. My last corporate gig was with Forrester Research. And about 15 years ago, they capped my commission. And quite frankly, Andy, they me off. So I started my own company out of anger. Because I mean, really, I make you an extra $20 million you didn't ask me to make, and you can't give me 10,000 of it, right? And so my first company's Modal Point, which is a market research company. It's still around. And about 2013, actually, my marketing guy came to me and said, we need to start a podcast to promote this business. And I looked at him, Andy, and I said, that's the stupidest thing I've ever heard come out of your mouth. Nobody listens to podcasts. And back then it was true.
Yeah.
There was no app. You had to understand how to download an MP3 file. Yep. The software to edit audio was expensive and clunky. Nobody had broadband, so you couldn't do this. You couldn't do remote interviews. And Apple had introduced a piece of hardware called iPod, and also introduced a new genre, which was podcasting. But all of us, including myself, didn't load podcasts on the iPod. We loaded music on it, right? So even the genre was dying. And so, like a little kid, every day he would ask me, when we're going to do this, when we're going to do this. And he just wore me down. And eventually I said yes, so he would shut up and leave me alone. And what I didn't know is we start the first oil and gas podcast in the world. That's Oil and Gas This Week. And so I didn't see the opportunity. Now, 3 months after we started it, Red Wing Boots called me and said, hey, we want to sponsor your podcast. And I almost said, why? But the old sales guy me kicked in and said, shut up, let them talk first. Once I realized you could monetize this, then I got interested in it. Like, is it repeatable? Can you scale it? And the answer is yes, you can. It is repeatable.
Yeah, it's interesting. Well, one note about podcasts, I used to say the exact same thing. Nobody listens to podcasts. I'm also kind of famous. I remember when I heard not famous, but in my circle of friends, business partners, when I first heard of YouTube, I was telling them like, dude, this thing is never
It's not going to
catch
go
on.
anywhere. Yep, me
It has
too.
it has the stupidest name. Whoever is going to use this thing called YouTube, it just has a dumb name. Um, so I've kind of learned to have a little bit of humility when evaluating these things. But obviously, podcasts are huge now. They're just like, frankly, like I said, I'd rather listen to your show than read a textbook
Yeah,
about geology. I think most people are the same way. And this is another interesting thing. So you were really the first podcast covering this industry,
yeah.
and
First one.
so my thought is, okay, you're the largest. Is that because you were first, or because you're
Yep,
really really good at it? But then I'm actually like, you know what? I think those things are related,
they
because you're
are.
not going to publish 400 episodes of this without getting better and better at it, right?
Yeah. So being the first gave me a head start on everybody else, literally. Um, Now there's hundreds and hundreds and hundreds of podcasts focused on oil and gas energy space. When I started, there were none. And if you listen to the first episodes, they're horrible. I mean, everything about it's horrible. The quality of the audio, the quality of the editing. We scripted a lot of stuff. I mean, it's embarrassing. But you learn and you get better and better. And then luckily for us, we grew a large audience rather quickly. So we started getting audience feedback. And I think in a lot of ways, that's the secret of really fine tuning your podcast is not doing what you think you should do. Listen to your audience, right? And that's where all the multiple podcasts first came from, is that our audiences reached out and said, hey, can you do a podcast on X? And we weren't doing one. I go, yeah, if we can find somebody to pay for it. And that trend continues. Even today, every day I have between 20 and 50 people around the world reach out to me and said, hey, Marc, can you do a podcast on oil and gas finance or oil and gas pipeline or through tubing services or hydrogen? And we keep track of the top 20 of those requests because we know there's an audience waiting for it. So
Mm.
yeah, being first gave me a lot of advantages. Um, Understanding enterprise business gave me another set of advantages, right? So the odds of somebody that's used to selling multi-million-dollar deals to Exxon starting the first podcast in the industry is very slim. But those two sets of experiences and skill traits actually very much complement each other and allowed us to grow.
Yeah, and it can be a little bit tough, I think, being a podcast, or at least my experience covering the alternative investment space. There's like the little independent startup firms where I can email them and their CEOs returning my call in like 30 seconds. Like, yeah,
Yeah.
I can't wait to be on your show. And then you might interface with some huge company like Fidelity or Vanguard or something. And it's like they have layers upon layers of compliance. And at some point, as a host, you're kind of like, man, is this even worth it? But usually it is, not always. In your experience, is it easy to get access to people in the oil and gas industry?
Now, it takes us through the window of uh, we run this enormous podcast network focused on energy. We literally have listeners in every single country on the planet. Congress listens to us. Mike Wirth, the CEO of Chevron, listens to us. Members of Congress listen to us. So when I say it's relatively easy for us now, it is, but that was 10 or 15 years worth of work to get where we are now. Same way with the corporate bureaucracy. So ExxonMobil, who I love to death, but I hate doing business with, has to be one of the hardest companies to get their PR and legal investor relations to say yes. And we're the only company that allow their executives to come on. Now, they still have to listen to it and approve it before it goes out. And the first time we did that, it took them 11 months, Andy, to approve the podcast. By the time it came out, it almost wasn't relevant. Now we have it down to about a month. But that's when you're dealing with these type of companies. That's just what you have to learn how to deal with. And it's for us as part of our internal process. We literally part of our workflow is, does it need approval, and if so, who is it? And we start a countdown timer. And it's just part of doing business.
Yeah, no, totally. And I mean, to your point, if it's Exxon, then like, yeah, you're gonna jump through some hoops, right? In my case, if it's Vanguard or Fidelity or whatever, like I'm gonna jump through some hoops. Well, let's talk about where we kind of intersect, right? Because I'm coming at oil and gas from the investment perspective, from the perspective of a non-industry person, a non-expert. Like I'm not talking about corporations, investing in assets or acquisitions or anything like that. I'm talking about passive investors, financial advisors, family offices, maybe even institutional investors who know they want to invest in this space, but are not in this industry. And I mean, right off the bat, listening to your show again, which I love how accessible it is, but I do have the feeling like this is kind of, I don't want to say an insular industry, but like it's its own thing. Like, and if you're not in this world, you need to understand like its own world. Cause like in other areas of, you know, the corporate world, to me, it can kind of all blend together and it all starts to be samey, you know, it's like, but oil and gas, it just seems a little different. Like the culture is different, the language is different. Is there any validity to that?
100%. This industry is extremely unique. Um, and it's unique based on what we do. If you think about what we do fundamentally, we're trying to go capture something which is flammable and explosive. And it's under 2,000 feet of rock, under 2,000 feet of water. And we have to do it in a way where we're environmentally responsible. And the project has to meet deliverable timelines. The project has to meet its budgets, right? It's not like we're part of the government where we can just do this and it doesn't matter whether we make a profit or not, right? And we have to do it in a way that nobody gets hurt. It's unbelievably complex. And safety, health, safety, environment is the biggest driver in this industry. And a lot of people from the outside would never guess that in a million years.
Mm-hmm.
You know, if I spilled 2 ounces of crude oil in the Gulf of Mexico, I have to report that to the government. You go to a truck stop where diesel trucks refuel, there's 100 years of diesel spilled to the ground. Nobody cares, right? So having to work in that and the engineering that goes on in this industry to make it work is insane. My NASA friends get mad at me when I say this, but I'll put a subsea oil and gas engineer against a NASA engineer any day, and that subsea engineer will come out ahead every single time because he has to engineer things that work, that are deliverable, that meet budgets, that have to be broken down, shipped to the other side of the world, put back together, drop on the ocean floor, and has to run itself for 10 years without a single mistake, zero defect manufacturing. No other industry has to deal with that sort of stuff.
I mean, it sounds almost like the military, except for the part about meeting the budget, right?
It's a lot like the military. There's a lot of command and control because of how dangerous it is. And if you make a mistake, the worst that happens is you lose a big client and maybe you lose your job. If I make a mistake, people die. And not only do people die, I could generate an environmental catastrophe which can destroy a company overnight. So it's different. Now, the flip side of that is when you do your work right and you're investing money in the right place at the right time with the right people, the returns in this industry are phenomenal. But there's a lot of risk, right? You can go, you take a deep water project in the Gulf of Mexico. From the minute that project starts until say 50 or 70 years later when it ends and they decommission it, that might be an 80 to $100 billion CapEx investment, right? Only 70% of the wells that are drilled offshore are viable. Imagine making an investment of a couple $1 billion and having to go back to your boss and say, we didn't get any money back on that one, right? So there's a lot of risk in this industry as well.
Speaking of that risk, kind of zooming out and putting in the context of, kind of, which is passive investors, either accredited investors or financial advisors, family offices. Presuming that you're an accredited investor, that you have enough of a portfolio where you could allocate like a risk managed allocation to oil and gas. So it's, what I mean is you might be investing 5% or 10% of your net worth in this rather than 50% or, something crazy. But I've talked to some people in the industry who have basically said, if you're managing that allocation, you still shouldn't invest because there are just so many sharks in the industry. It's so complicated. You don't know enough. You don't know how to underwrite. You don't even know how to, read the due diligence or get the due diligence. Do you think private investors should just stay away totally? Or do you think that there is a path provided they go about it the right way?
There is a path, right? So a couple of things. Don't ever invest a penny on anything outside the U.S. if you're not used to this industry. There's a lot of corruption in this industry because of how much profit it makes around the world. Luckily, here and in Europe, we've eliminated almost all of that corruption. But in the Middle East, Central South America, Russia, China, it's still rampant. And if you don't know exactly what you're doing, you're going to get ripped off, bottom line. In the U.S., a lot of people don't know this. Most of the hydrocarbons, so most of the oil and gas that's produced, is not produced by Exxon and Chevron. It's produced by independent operators, small family-run businesses, 5, 6 people that great-grandpa started the drilling business, back in 1907. And they're always looking for capital. So they have capital come in, they use that capital to go drill a well. That well then has production numbers, which you can extrapolate the profits you're going to make. And if they do it right, they're making enough profits to pay back the investors plus whatever percentage that they agreed upon, which then gives them the power to attract more investors to go drill other wells, right? That's how the cycle continues. So if you can get plugged in with one of those independent operators in the US, or I should say North America, it's the same way in Canada, you can actually make some good money. And there's companies out there that allow you to do fractional investing. So they understand it. They do all the due diligence. They're going to make a percentage off all the fractional investors. So to them, they want this to be profitable too, because that's how they make their money. And it's actually a very safe way to invest without really understanding the industry, is finding one of those companies that invest in North America's small independent operators. Now, you're not going to make a 50%.
Because Mark, you're basically trusting the incentive there to kind of take care. Because I think that's just as important as the technical details of any offering is what is the incentive of the asset manager or whoever's managing this investment.
The incentive and what is their history. So they're going to have times they strike out, but if say 6 or 7 or 8 times out of 10 they knocked it out the park and they've lost 2 or 3 times, that's probably somebody you should talk to. If it looks like they've never lost, it's probably fake information. Walk away, right? Mm-hmm. And the other thing about this is that your returns, there won't be great. You're not going to make a 50% return on your money. You might make 20 or 25, and depending on what the market's doing, the delta between what you can make in the market and investing in oil and gas operations is enough to actually make it worthwhile. Now, of course, I know this industry, but I about 50% of my personal income is in the market. The other 50% is in small operators where I'm getting a consistent 17, 18% return on my money, sometimes 20,
Plus the tax benefit, right? And I mean,
plus the tax benefits, right?
I mean, to me, because, our main show, the Alternative Investment Podcast, we're basically covering private money. So it's a little different from institutional money. With private money, everything is triple net, where you're factoring in, most of this investment is through a taxable account. And so, these independent oil and gas producers that you're talking about in the United States, investing in them usually comes with tremendous tax benefits. So it's like a 15% in that type of investment might be equivalent to 18 or 20% in another, non-tax advantage investment.
Yeah. Now, be aware that this industry is cyclic in that about every 10 to 15 years, the price of oil crashes. And I can explain real easy why that happens. The price goes up, which is happening right now. This is September 26th of 2023. What should be happening is that operators see the price going up and they start drilling, because it takes about a year on land between the time you start drilling and you actually go into production, get it in the market. They start drilling and then they all go to market in production about the same time, which then floods the market with hydrocarbons. Right. So then the delta between the supply and demand isn't there anymore, and the price tanks for a year and then it comes back. And if you go back and look at history of pricing, you literally can see almost predictable every 10 or 12 years that happens. So if you're in a part of the market where you think you're headed toward the next downturn, maybe just wait, right? And wait till the price tanks, then invest. And that's when you make the big money. When everybody else is running away because the price of oil is $30 a barrel instead of 100, if you invest then, that's when you make the 25 or 30% chance return on your investment.
Absolutely. That's the whole, be greedy when others are fearful, be fearful when others are greedy. I mean, it's tried and true. You're 100% correct. It's a cyclical market. I mean, really all markets are, right? Because that's the invisible hand of the market working. That's Mr. Market, where something that's profitable enough, it encourages more investment because, that attracts new entrants or more investment, which actually then lowers returns. It's a self-correcting, efficient market. But, one other thing we discussed briefly before we hit record, and I'm like, oh, we got to start recording, talk about this, is, this may not really be an efficient market in terms of top level allocations being made by a lot of major institutions, because now we have ESG. There are other considerations driving investment in the energy industry beyond just the risk return profile of any given asset, right?
Yeah, this year is a very interesting time, and it's different than any other year I've ever experienced. And I do these predictions every year. So November of this year, I'll do my predictions for 2024. And I've done this for about 14 years in a row, and I'm about 72% accurate. And by the way, people, don't take any of my predictions as investment advice. Do your own due diligence. But this year is one that I've never seen before, and it's hard to predict what's going to happen. So right now, companies should be drilling, not just here in the U.S., but all over the world. Remember, hydrocarbons are one of the true global commodities, right? So if crude oil is going for $85 here in Houston, it's going exactly for $85 in Tokyo and Rio de Janeiro, right? It's the exact same price all around the world because of supply and demand and infrastructure. So right now, companies should be drilling and production should start increasing the first quarter of next year, but that's not happening at all. Drilling rigs counts should be going up. They're actually going down. Part of that's due to inflation. So the cost of actually drilling a well is a lot more now than it has been in a very long time. Part of it has to do with the feedback and the results of negative public perception. No young kid wants to go work for Chevron anymore, right? So we're having a really hard time hiring people. We have a huge labor shortage all across the industry. Number three, you mentioned ESG. There's something going on there that I haven't quite figured out. So just right after the pandemic, ESG was a buzzword, right? You had all the big investment companies like BlackRock saying, unless you have an ESG checklist, we're not going to invest money into you. That really hurt our industry. A lot of the independent operators I've talked about could not get any capital, and they have to have capital to operate their business. A lot of them went out of business. Not that they couldn't drill profitably, they couldn't get the money to drill, right? Mm-hmm. Well, guess what happened? A few people didn't listen to BlackRock. A few people didn't care about the ESG wave, and they invested money anyway in oil and gas. And the returns that they made were so phenomenal that now all of the funds that have these ESG checklists had to go, maybe this isn't as important as I thought it was. In fact, BlackRock just yesterday, two of their ESG funds, they closed, right? And a lot of the people that have ESG funds, they've had negative returns on it. And so they kind of learned their lesson. So now capital's flowing back into oil and gas, but there's still something else going on I haven't figured out. Drilling should be happening. It's not. Part of that is inflation. Part of that is the lack of labor. But you look at companies like the bigger companies like Exxon, they don't have to borrow money, right? They have internal capital and they figure out the internal cost of capital and they put it where it makes the most sense. Even they aren't drilling right now. Although the demand is going up, the world is still in an energy shortage. So something's happening right now that I haven't quite figured out. I'll have it figured out by November when I do my predictions. But there's another component that's driving behavior in the market right now in oil and gas that's normally not there. And I just don't quite have it fully baked yet.
That is so interesting. And I honestly cannot wait to hear the prediction. If I could take a crack, I don't think this is a total explanation, but what I always go back to is incentives. And what I have found when people are investing their own money, right? My money from my paycheck or my business, I pay the taxes, I pay my living expenses, I have this left over, I'm going to invest my own money. When it comes to my own money, ESG on the retail level, it's like nothing. Like nobody invests based on ESG, virtually nobody at that retail level with their own money. At the corporate level, it's totally different because if you think about the incentive for most corporate executives, and this is true whether you're an asset manager or in any kind of industry, you're not really driven purely or even primarily by the profit motive, right? I mean, human beings, were social creatures. We want to advance our careers. We want to be quote unquote popular, and being green and investing in renewable energy. And even ESG, again, it's quite popular in the corporate world, and world, it's like nobody cares. So I think there's something going on where the culture within a lot of corporate is just a little bit different, and it's not necessarily rowing towards maximizing risk-adjusted returns for the shareholders, you know?
Yeah. So there's a strange thing going on in the renewables world too, though, right now. So me personally, I see it all as energy. I think it's utterly ridiculous. And I'm sure some marketing person did this 30 years ago. But why does oil and gas and renewables see each other as competition? They're not. It's just freaking energy. And some things make more sense than other things. You know, wind has its place, solar has its place. Geothermal, this whole world should be run off geothermal and nuclear if you wanted to know the honest truth. And yet, even the renewable side, so there's in the US right now, there's a lot of money being pumped in renewables from the IRA, which who came up with that stupid name? It has nothing to do with reduce inflation. Anyway, but even they're struggling right now. So you're seeing a lot of wind farms that were stood up that were funded now actually have a long enough life. They need maintenance, but there's no money to do maintenance on them. So a lot of the big wind farm projects, I think, are closed. And then unlike oil and gas, so here in the US, if you would drill an oil well by law, no matter where you are in the country, you have to either post a bond or put money away to tear that oil well down and put it back how it was naturally when you're finished. It's called decommissioning a well, right? Nobody has done that with wind farms. So I think, unfortunately, I think in the next 5 or 6 years, you can see a lot of abandoned wind farms, especially in the coast, that there's no money to decommission them, tear it back down. And so even the renewables people are struggling right now. It's just an interesting time at the same time that the world is still in a little bit of an energy shortage. And as Europe goes into the winter this year, it's going to be bad. Germany, hats off to the German people. They built an LNG import terminal faster than I think it was humanly possible so that they could start importing liquefied natural gas from here in the Middle East and Europe so they don't have to depend on Russian natural gas, but they're not going to have enough. And it's just a very interesting time. Once again, like I said, I don't have it figured out. I welcome your input. I welcome actually your audience's input. Anybody can help me figure out what's really going on. I want to know. But we'll eventually figure out what it is. And I was mentioning this before we turn on the microphone, in that there's a lot of opportunity right now. Anytime you have these types of unknowns and the market's moving in a way that hasn't before and it's not predictable, it's a chance to make money. You just have to figure out what it is and where it is before anybody else does.
Well, on that note, and you talked about how you're heavily invested into independent oil and gas producers. I'm upstream in the United States, and we kind of talked about some of the things that you look for. But where would you advise if you're an accredited investor, a financial advisor? You're an advisor. You're saying, you know what, I want to start having some of my clients investing in oil and gas because of the tremendous tax benefits and the upside. Where would you start to find the highest quality operators, even if the returns maybe aren't as high as they could be, but the sort of the safer, more proven operators?
I don't know if you're going to want to edit this part out because I might answer your question very bluntly.
Sure.
You need to look at Prairie Operating Company. They just got stood up. They just got their first round of funding. I met their team, and it is like the A team. It's like the Olympic champions. So all of their team members are very well established, very experienced, being profitable in drilling wells. Somehow, so when you drill a well, an oil well, the property. So the U.S. is the only country in the world where you can own mineral rights. So maybe if you own your home, you may even own the oil and gas that's under your home. Probably not. The developer probably kept the mineral rights, but you could. So when you buy mineral rights, when you lease them, you're basically paying somebody else that owns the mineral rights money to go in and recover those hydrocarbons for a flat fee plus a percentage of your profit, right? So the quality of the mineral lease is real important. You don't want land that the oil's hard to get out of the ground, expensive. You want land where the oil is easy to get out of the ground and cheap. Somehow Prairie in Colorado found this huge batch of minerals of oil and gas leases that nobody had saw, that nobody noticed. That's prime A, like it's the easiest oil to get out of the ground. And the roads are already built. So a lot of the money in oil goes to build infrastructure to get the equipment there and then get the oil back to the market. So the roads are already built. So they have none of that investment they have to make. They have pipelines already built that are not running at capacity to bring that oil back to market, which you never find. Usually you have to build your own pipelines to bring it oil back to market. Then somebody built an electrical generation plant in the middle of all this, thinking that housing was going to be developed, and it never happened. So the electrical generation plant's only running at about 15% capacity, which means they're going to be able to use electricity instead of diesel generator sets to run the rigs and all the production. So they're environmentally more responsible. Like it is like the heaven. And so if you're looking for a place to go put money with a high chance of really good returns, that's very safe, I would look at them. And like I said, you may want to bleep out the name. But the other thing is,
I got no problem putting in the name. I mean, I'm asking for what you believe, what you really think.
I have never seen an organization that has the highest chances to knock out the park like they do. It is amazing. It's like the perfect storm came together, and all that's based on their leadership team's experience. They knew exactly what they needed to find, and somehow they found it. The other thing is, you could do a quick Google search and just look for oil and gas operator aggregators for investment, and you're going to find hundreds and hundreds of companies that do this. Check out their track record. Like I said, you want somebody that has done it for a while. You want to look at their leadership team. You want to see how many times they've been successful, and they're not going to be successful 100% of the time. They're going to be successful 7 or 8, and that's what you want to see. And it's a fairly safe investment. It's safer than playing the market. I mean, I don't actually play the market. Everything I have is invested in like no load mutual funds, and I'm just trying to make a steady 8 or 9, 10% return. But some of the individual stocks I do own, it's crazy how you can go from one extreme to another.
Yeah.
You won't see that investing in oil and gas. You'll see, if you lose money, you'll see it way ahead of time, right? You'll see that it's coming. And if you make money, you'll see that way ahead of time as well. And then, like I said, it's not enormous returns, but it's good, steady, 12, 15% return on your investment.
Yeah, I mean, I think a lot of family offices are targeting 8% blended return, right? So oil and gas, it's going to be much further towards the risk end in a portfolio. And I think any thinking investor or any advisor might say that's okay. You just have to manage allocation, and especially with diversification, right? You don't want to have 50% of your portfolio invested in like a single well or anything like that. So it's diversification across assets and then within asset classes. So I think that's where the aggregator is a really interesting, that's a really interesting play. Well, we've talked about a lot of the big themes going on this year, and I'm looking forward to your predictions. Is there anything else you think that's going on under the radar that maybe investors or advisors who are looking at this industry maybe should be aware of or should be looking into?
Yeah, unfortunately, politics. Um, Regardless of what your political persuasion is, here in the U.S., you have one side that hates us, that think we're the devil incarnate, and the other side doesn't know what we do, quite frankly. So neither side really helps us. And all it takes is for somebody to pass a law that restricts. So I'll give you a perfect example. They just opened up a bunch of leases in the Gulf of Mexico. So this means that which by the way, your audience may not know this. Let me tell you who makes most of the money off oil and gas in the U.S. It's the federal government. They have most of the leases. So here in the Gulf of Mexico, they just opened up 600,000 acres. Somebody like Shell or BP can go bid on that. And to get a lease for 10 years might be $800 million investment, right? So you just wrote a check. You just not pay as you go. You literally write a check to the U.S. government for $800 million. And you still got to drill and you still got to produce and hope that you're that 7 out of 10 that are profitable. When they open up these leases, they also passed another law that the boats that you use to move all the parts and people around can't operate at night. Well, that doesn't sound like a big deal. Let me tell you what, that triples the amount of time it takes to construct an oil well, which adds cost. So all it takes is a government to change the law somewhere that you may not even notice, such as the crew boats can't operate at night. And all of a sudden, the profitability in the Gulf of Mexico shrunk from, 30 or 40% to 10%. Now, luckily, somebody took it to court and it's been overthrown. But if you're investing in oil and gas, in the U.S., you got to be aware of politics and how they can affect both the profitability and the longevity of what you're investing in. The use of hydrocarbons will never go away. Hydrocarbons are still being made. We'll never run out of them. Mankind will use them forever. But as we go through time, we use less and less hydrocarbons for fuels, right? Our cars are more energy efficient. You have electric vehicles, which if you haven't driven a Tesla, don't, because you'll want it immediately. And it's not because it's electric. It's just a cool freaking car, right?
Yeah.
And that natural progression is going to happen. Yet the world still needs tires for the Tesla, the vinyl for the Tesla, the adhesives. The world still needs fertilizer, soccer balls, nylon shirt, car tires, all that's made from hydrocarbons. So every year here in Europe, we use less and less hydrocarbons for fuel, but more and more to make products out of. So the investment potential long-term wise will always be there. You just got to pay attention to politics. All it takes is one lawmaker to pass something and it changes the market dynamics completely.
Yeah, and not to mention, to your point, it's not just vehicles, right? There's so many other uses for petroleum products.
70% of the world's fed with fertilizer made from natural gas. Nobody knows that, right? Fertilizer prices and diesel prices this year have been unbelievably expensive. So what does that mean? That means food prices next year, when we go through the next growing cycle, it'll be really bad, or really high, I should say. You would never guess that, knowing that connection between agriculture and the oil and gas industry. But to your point, there's a huge connection.
Yeah, and that's where, I'll put it this way. I think a lot of anti-oil and gas sentiment is coming from a place where people feel like they hold the moral high ground, right? Because I care about Earth and you don't, or whatever. There's another to it, which is, citizens of a developing country, the world's poor, the world's working class, higher food, higher medical care, higher clothing. It's a lot different than if Andy has to move, from a gas car to an electric car. Like, that's a pretty easy lifestyle change. It's pretty easy to do that in a developed country when you have a high income and all of your basic needs are met. But access to cheap and secure energy, it can mean literally life or death, or certainly basic necessities to many global citizens.
Andy, you're singing my song. There are still babies being born by candlelight in Nigeria. That's shame, right?
Mm-hmm.
There are people in Europe this winter that are going to have to choose between putting fuel in their car to go to work and buying food for their kids. And all this is being driven by bad political decisions, which has artificially increased the price of energy. And to your point, people like you and me may grumble, but we'll still be able to feed ourselves, right? A lot of the world won't be able to, and it's a horrible thing to do to humanity. That's one of our goals with Oil and Gas Global Network is, yes, we make money, yes, we have fun, but we give back and we try to educate the world. We're starting a show with ninth graders as hosts about energy literacy for children, because I want to educate the world's young people on the truth about energy, not politics, not opinion, right? But just the science behind it. And so, yeah, it's horrible when people don't have the electricity and the cheap, reliable, abundant energy. And we're spoiled by it here. I mean,
Right.
Andy, our poor people here are fat and have cell phones. And I know that's kind of funny, but think about that. That's how
Yeah.
prosperous we are because of the oil and gas industry, that our poor people are overweight and have cell phones. No other place in the world do poor people have cell phones and are overweight, because they're starving to death. And it's just a shame that we can't, because of this negativity that's been pointed out in our industry, we can't share this with the world in the way that we should be able to. But it's coming. I'm starting to see a lot of anti oil and gas protests popping up. I don't know if you've seen any of the Just Stop Oil people in the UK. There's now a anti Just Stop Oil group called Just Stop People Off that now are protesting the oil and gas protesters. And if you haven't seen it, go to YouTube. It's hilarious as hell.
That's awesome. Well, to that point of your mission, I mean, I think you all are succeeding. I mean, your podcast, just your course show, the whole network, obviously it's an incredible success story. That being said, I know we're almost out of time, but Marc, where can our audience go to learn more about all of your different shows and see your new website?
Yeah, just go to OGGN.com, Oil and Gas Global Network, OGGN.com. And Andy, we're actually launching a finance show next year. So when we get that show launched, I'm going to come back to you and have you as a guest on our finance show, right? So you can help share with our audiences some of the work that you're doing.
Awesome. I can't wait. I really appreciate the invite and your time today. Thanks again for coming on the show.
Yeah, no, this has been great. Always happy to do so.